One question which I keep getting asked is, should I go for the dividend option or should I go for the growth option? Honestly, I would always suggest the growth option, because what the dividend option does is the dividend option pays you dividends where you do not know the frequency and you do not know the amount that you will get. So 1 year you may get 40,000, 1 year you may get 50,000, next year you may not get dividends. So those things will happen, though largely mutual fund managers try to maintain a particular level of dividends if they in the dividend option. Is it a good thing to take up the dividend option? The answer is it depends on whether you're paying tax, and if you're paying tax, it is definitely no. The answer is a no. And if you're not paying tax, then why bother doing this? So okay, let me answer it this way. It is less tax efficient. Dividends are less tax efficient because earlier there used to be a dividend distribution tax which had to be paid, after which the dividend was paid to you. Now there is no dividend distribution tax. However, the dividend comes to your hands and you are taxed at the maximum marginal rate. So if you are at the 30% tax slab, you will pay 30%. Of course, most people walk into the 30% slab. After that, downward, what surcharge rate are you? Are you at 10%? Are you at 30%? Are you at 40%? Whatever the highest slab. So then dividends get taxed at those rates. So it is tax inefficient, and the fund manager finds it very difficult to pay dividend also, because he has to pay out of realized profit. So to pay dividend, he has to sell some shares, book the profit, and then pay dividend. He cannot pay out of fresh inflows which are coming. He has to book the profits, have the cash, and from that is what he will have to pay. If you take the growth option, today there will be no TDS there will be TDS on your dividends above 5,000 rupees, and you will of course get credit for it when you file your return. It's much better to take the option of growth, because with the growth option what happens is the NAV keeps increasing. So please understand, a company when it pays a dividend, yes, of course it has an impact on the share price, but you don't find a one-to-one correlation. So if you bought a share for 100 rupees and it pays say 3 rupees as dividend, it does not mean next day it will become 97 when it becomes ex-dividend. Technically it can, but it doesn't. Whereas in case of a mutual fund, the minute the dividend is declared, exactly that much is reduced from the NAV. So there is no great use from having a dividend, because once that dividend comes to you, suppose it's a small amount, it's 3,000 rupees or 4,000 rupees, it will just rot in your bank account. You will do nothing. Suddenly you may spend it, or something like that will happen. Now, sorry. If you are a young investor and you are living off your income, there is no reason why you should have dividends, because it's tax efficient, being taxed at the maximum marginal rate. What is the other option? The other option is called growth. You go and put money in a growth option always, and if you need cash flow, you do a systematic withdrawal from year number 2. Right? So that also, if it's an equity fund, if it's a debt fund, from year number 3 or 4, whenever you want to withdraw, but minimum is 3 years. After 3 years you can withdraw, and then you will pay lesser tax than what you would pay if it was added to your income. Of course, this answer is a very flat answer, in the sense that growth option is always best, but you have to individually decide what you want, because if you are a small investor with a very small amount of income, maybe for you dividend option may not be too bad. So please ask a consultant, could be a tax consultant or your financial advisor, and then take these decisions. For me, in my case, I am a higher end tax payer, so I have if I have invested in the mutual fund, it is all in growth option. I don't have anything in the dividend option. That's what I have done. So this is suitable for me. You may want to find out what suits you, but to me the general rule is you should always have the growth option and not the dividend option. Thank you.